months ago, I've been talking about products or services that I offer that cater to the senior market, whether that be Medicare supplements, Advantage plans, or long-term care insurance plans. But for the past couple of weeks and today, I've been talking to you guys about life insurance because the bottom line is that if you depend or someone depends on you financially, you're going to need to have some kind of life insurance or at least look into it. Because there's actually a bunch of different life stages or life events where life insurance is needed, whether someone is getting married, whether someone becomes a new parent, whether someone becomes a new homeowner, gets a mortgage from this gentleman, Dan McKenzie, or someone is retired. Maybe they want to leave something for their children or grandchildren. So again, there's a bunch of different stages or points where it at least needs to be looked into. But what exactly is life insurance? Well, the most basic feature is the death benefit. Essentially, the client's beneficiaries would receive a tax-free lump sum payment in the event that they should die, that the client dies. And there are really two different types of life insurance: term life insurance and permanent life insurance. Term life is exactly what it sounds like. It provides protection for a specific period of time, whether it be 10, 15, 20, or sometimes even 30 years. It offers the greatest amount of coverage for the lowest initial premium. So it's really good for families that are on a budget and a bit of a money crunch. It's designed for temporary circumstances when the coverage need for coverage will disappear at a certain point, such as children graduating from college or paying off a mortgage, because ideally you're eventually going to end up paying that off. The one thing about term insurance, the best analogy I could come up with, because there is no equity in a term insurance policy, it's a lot like renting a house. So if you think about it this way, as soon as you rent a house, you get all the full benefits of the house during the time of your lease. But once your lease expires, you have to move out, and you're essentially left with nothing. So that's really what you get. If you don't use it, you lose it. Now, God forbid you did actually use it, but that's essentially what it is. Permanent insurance is a little bit different. It does give you lifelong protection, meaning you pay the same amount every month for the rest of your life. Chances are it will not go up, and it will not go up regardless of a change in your health status. So let's say you get a permanent insurance policy 5 years down the road, you contract some kind of illness, the premium will not go up under any circumstances. You do not need to prove your insurability during your life, okay? Downside, it does have a little bit higher premium than a term insurance policy, but the premiums are level for life, as I said. Another benefit for permanent insurance, it does have what's called a cash account or a cash value account, where it can be used as a guaranteed loan, or if you are looking for something to supplement your retirement income, which is a nice aspect of it. So over time, it does grow tax deferred, so it's another nice supplement to what you already have. And if you guys take a look at your handout that I passed out, this is one thing that I do with most clients when evaluating how much life insurance someone is looking for. And this is an example of a client that I worked with a couple of weeks ago that ended up getting a policy from me. Now, obviously his name is not John Doe, but he is 42. His wife is 40. And in that little blurb at the top, I have the client is a non-tobacco client who's hoped for either a preferred or a preferred plus rating. Initially came to me looking to spend less than $75 a month because he just threw that number out at me because that would not adversely affect his current standard of living, affecting his current bills or what have you. And before we even started the analysis, he estimated a need, well, I think $500,000 would be okay. I think that's a good number, so why don't we go with that? And I said, well, wait a minute, I understand where you're coming from, but why don't we just run through the analysis first and see if that is indeed a good number for you. So as you can see, we have three different steps that I use in the analysis. Final expenses, including funeral costs, estate closing costs, threw in $20,000. You guys' average funeral is actually about $10,000 nowadays. Definitely not cheap by any means. Put his outstanding mortgage in there. Put in $40,000 for car payments. Also, 2 kids need for college funding, so also factored that in too. Step number 2, we estimated his family's income needs in case of his death. Total annual income family would need if he died today. We just put $70,000 in there, and we used that number just so he could maintain his current standard of living. How many years should be provided? 25. Because his wife is 40, 25 years down the road, she's 65. We put his savings and investments, retirement savings in there. And he actually has a current group life policy of $100,000 through his employer, so I factored that in as well. And I also factored in step number 3, assuming your spouse would work following your death, put in the spouse's annual income. How many years does she expect to work? I just put it until 65. Threw in a few assumptions of a tax rate, inflation, and assumed investment yield. And we actually came up with close to $700,000 of insurance need. So it's one of those situations where we came in initially thinking $500,000 would be a good number. We ended up with close to $700,000. And as you can see at the bottom, we actually applied for a 20-year term, $700,000 in death benefit, and he actually did get a Preferred Plus rating. Ended up paying only $53.85 a month, and we were lucky enough to meet all of his goals. So I just wanted to give you guys an example of what I do with clients who might be confused as to how much life insurance they need, and hope I cleared up some answers or questions for everybody. And I'm Josh Lee with Key Planning.